Hi, this is the Euro-USD pair, and today it's Sunday, 12th of May 2013, and in a couple of hours the markets will open, and we are looking at the M15 chart, the 15 minutes chart, and I will take you to a tour of the market of the pair using three different trading systems. I will start with the one I have given to the chart signal of the pair, and gradually I will be changing my chart, and I will using different indicators and tools to give you a complete image of the market. So after the big corrective move, here we are looking at the chart where we are using Bollinger Bands, alligator, these three colored lines, Bill Williams alligator, and Bill Williams fractals, these purple arrows. Detailed presentation of this system you can find on my book for Bollinger Bands on Amazon, and you can also find it in a printable PDF format. Just check your app and you will see the details. Now, how this system works. This system gives us valid signals when the fractals are at one of the three bands, the upper, the median, or the lower. When the fractals are at the lower Bollinger Band or in the medium Bollinger Band, and they look downwards, if they are at the lower Bollinger Band and look downwards, like here, we call them bullish reversal fractals if they are below the red line, the alligator teeth, they are, and if the leading alligator is curved upwards. In this case, it is curved upwards, so we consider this valid fractal. Of course, a fractal is a 5 candlesticks formation. So for this fractal to be labeled, we should be somewhere here in order to see it. So when we see this fractal, we are here, so maybe the curved alligator is not seen yet. So in this particular case, this is the M15 chart. Let's go to the M13. Okay. Here we have another fractal, which is also a bullish fractal, but not reversal, bullish continuation, because it is below the median Bollinger Band, the 20 SMA. And what we see, the fractal is below alligator's teeth, below the red line, and the leading alligator is slightly curved upwards. So yes, it is a valid bullish continuation fractal, so we can enter long here. And at the same time, we see that the lower Bollinger Band, because it is very important for us to pay attention to the Bollinger Bands, their geometry and their edges. Okay, so the lower Bollinger Band is horizontal. It says stop to the downward move for now. It is a break to the downward move, since Bollinger Bands contain the price action because they represent the volatility of the market, and they show us if there is huge volatility, if there is small volatility. Here we had very small volatility, that was a contraction, and here we had an expansion. As the US dollar became very strong, the pair started falling and making this corrective move. And here the Bollinger Band, the lower Bollinger Band, says this downward move has stopped. It ended here, and its edge starts turning inwards, while the upper Bollinger Band's edge is slightly turned outwards, slightly. And this geometry is, we have an angle here, so it is indicative of a reversal. Let's zoom out. Since new trends are being born in smaller time frames, sorry, we can see what I mean, going to smaller time frames like the M15. In the M15 you see that the lower Bollinger Band not only has stopped the downward move here, it also angled, it sloped upwards very strongly, and so did the median Bollinger Band, the 20 simple moving average, while the leading alligator is curved upwards. And the upper Bollinger Band is not turned outwards, which means that we may have a sideways movement for a while before, so maybe the two Bollinger Bands will start contracting, getting closer to each other, making a narrow neck like this before we have the continuation of the move upwards, the expansion, the breakout. Let's go down to the 5-minute chart to see how the pairs move is shown there. Okay, so here look what we have, how the price action has been drawn. Here is where the reversal started, okay? And look at the lower Bollinger Band. It started here, it stopped the downward move, it became horizontal, then it started angling upwards, and now it's horizontal, but we see that we had a very small contraction here, and the upper Bollinger Band is going, its edge is turned outwards, and the lower Bollinger Band's edge starts turning outwards, signifying strong, extreme price action on the Bollinger Band where the price is, and this is the upper Bollinger Band. That means that this uptrend is going to continue, and the Bollinger Bands are opening outwards in order to contain the price action, because volatility increases here. So they are like rubbers. They want to expand to contain this volatility. Okay, so fast forward, we go to the 15-minute charts. Here we see that there will be a sideways movement, at least as things look like now. Maybe we will have a gap when markets open, and it may be upwards, we will see. Then on the M13 chart, 30 chart, we see that the reversal is confirmed by an horizontal lower Bollinger Band, and the edge of the upper Bollinger Band is slightly turned upwards, and the edge of the lower Bollinger Band is slightly turned inwards. And on the 1 hour Bollinger Band, on the 1 hour chart, we see that although the lower Bollinger Band is not going down like this, the angle is lighter, but it is going to take an horizontal position which is not taken yet. And from the three lines of the alligator, only the smaller one, the smaller SMA, which is more sensitive, is curved upwards, and a little bit the middle one. The green stands for the lips of alligator, the red one for the teeth, and the blue for the jaw. So we see that things are moving slowly here, and even more slowly on the H4 chart, which has not recovered from the downward move yet. We see that the outer, the edges of the Bollinger Bands here are still turned outwards, and the alligator is falling down. And although we had this move, it was not enough for the H4 chart to sense it, to sense the difference. And the same stands for the daily chart. But on the weekly chart, we see that leading alligator is horizontal, showing sideways movement, and probably the Bollinger Bands will start getting closer and will form a new contraction phase. We will see. We can be prophets for now. Also in the monthly chart, we see that Bollinger Bands have gotten closer to each other, and we expect a sideways movement. When the price is moving, is touching the alligator, then we have a sideways movement, a consolidation, because when price is below the alligator, it's clearly bearish. When it is above alligator, it's bullish, and when it is inside the alligator, it is a consolidation or range bound. Now let's go back to our M13 chart, and let's use a different set of tools to see how things look like and how things are going. I'm going to remove these tools, and I'm going to use, here is the H4 chart. So let's take it even. Okay, this is a daily chart. I want to use the Fibonacci tool. So let me go to the H4 chart. Here we are. We had price went even below the 100 Fibonacci level, although it reversed right there, as we see. And let's zoom it out to see if there is significant support level there, if there is a confluence of support at that level. Yes, we have this zone here, which was previous resistance. Now it becomes support. Okay, we can find points where we had resistance, and now they make a significant support that can confirm that this reversal is strong and true. Let's have a look at the volumes and the transaction volumes. Well, we have a peak here, we have a spike, which is indicative of reversals, because when there is a tug of war between bulls and bears, it is like an auction. The bulls say that price is too low, so they jump in and they want to buy, and the bears insist that it can go lower. But finally we see that this war has been won by the bulls here. So after the war, after the winner is declared, then the transaction volume falls significantly. And this is indicative that this reversal is valid. It is confirmed this way. I'm going to remove this tool now. So we have the chart uncluttered, and I will add ADX to see if actually we have a reversal here. ADX is comprised by two indices. The red one is DI minus, and the green one is DI plus. We see that we had a bearish crossover where DI minus crossed above DI plus here, and if we take a vertical line, let me take a vertical line, and if we put it here at the crossover, we see that it coincides with the starting point of the bearish move. Okay, but what signaled the bearish move earlier was this knee formation here of the ADX. Okay, this is always the knee is always a trend reversal. Here we had another one, you see. So we had the trend reversal here signaled by the ADX. But what also is very important for us to see is that when an angle like this is formed on one of the two DIs, it means that we should expect, if an angle upwards is formed by the DI plus, then our reversal is confirmed, and we are going to have a bullish crossover and price will go up. How far it will go, we will discuss it, but for now let's go to the smaller time frame and see. You see here that we got an ADX knee. This is the H1 chart, 1 hour chart, and you see that we had an ADX knee just below the reversal, and we had on the next candlestick we had a clear bullish crossover where the DI plus crossed over DI minus. Very clear picture, and I'm sure we get an even clearer picture on the M30 chart. Yes, on the M30 chart, here is the knee, the ADX knee, and then we had the bullish crossover here, a small touch of the indicators because this is a smaller time frame and indicators associated with it are more sensitive and there is more noise in the market. But again here a confirmation of the bullish market sentiment. Okay, let me go back and remove the vertical line, and I will remove the ADX, and just a few words about the Fibonacci. Theoretically, we could exit, we should expect the price to reach the 0 point where the correction started, okay? But we will see, and if we are conservative, we will be happy exiting there and not expecting to ride the rally, to ride for bigger profits. Let's see though if that is the true limit, if we can put our take profit target there or lower, or if we can expect a bigger bullish move. We can try to look for patterns in the price action, and what I'm looking for is if there is a price, if there is a channel within which the price moves, because that would be very, very interesting to see. So I will insert some trend lines to see if we can actually talk about a channel. Okay, and I will insert another line here. It's not actually a parallel channel, but nevertheless it is a channel. And if we put it here, no. Okay, it's not how I want it to be, it's how it is, how it wants to be. Okay, so we see here that if price retraces, it may go a long way before it may go a long way upwards, but it hasn't touched this level yet. It can retouch it, it can retest it. So there are many possibilities. It remains to be seen which direction it will take. Let's see how things look like on the weekly chart. On the weekly chart, we see that there is a bullish bias in the market, but right now, you see the yellow lines where the price is. Do you see how many times it has been touched there? So it's a strong, very strong resistance, and at the same time it's a very strong support, the 130. Okay, 130 is a very, very strong resistance and support level. Resistance if the price goes upwards, support if the price goes downwards. So although things look bullish, we will see. We will see because on a weekly chart, a move like this, or on a monthly chart like here, a move like this is nothing. So, but it may mean hundreds of pips for the traders. So we see range-bound move here. We see smaller range and consolidation here. We can't be 100% absolute about to which direction the price will go. And of course there is this political upheaval in the Eurozone right now, so things are getting a bit weird. We can't make predictions based on stability, because stability does not exist. Let's go back to the H4 chart. I can remove Fibonacci and the trend lines, and now I can insert moving averages, 65 EMA, five EMA, ten EMA, 15 EMA, and 200 EMA. And then I can insert MACD, and let's see how things look like. On the daily chart, on the H4 chart, we also see that there is a channel here. And it's defined by these lines. Okay, so let's see if we can. Okay, so we should take our first take profit target somewhere here around 1.33, which is great, and stay attentive for a reversal to the lower line thereafter. Okay, so I'm magnifying it again. This is the H4 chart, and which are our trade criteria, which we are going to modify a bit here. So our trading criteria when using this system, the system of EMAs and MACD, is that we trade when price is above the 65 EMA, it is bullish, and the histogram, the MACD histogram is positive, is bullish, while when the price is below the 65 EMA, the histogram is bearish, and the market is bearish, etc. So theoretically we shouldn't enter long now, because price is below, not only below the 65 EMA but also below the 200 EMA, and we have a big bearish histogram hanging below the zero line of MACD. But we have a reversal here, and it is smart to to use the early entry signals of our indicators to jump in for bigger profits. Of course, there's always higher risk, but not if you buy at the lows or if you sell at the highs. So if we see the histogram going, the bearish histogram decrease in momentum, decrease in bearish momentum, which means that the signal line will jump out of it, then right at the moment that the signal line jumps out of it, we can enter long here. It doesn't matter if the three EMAs are still in bearish order. It doesn't matter if price is still below 65 EMA and even 200 EMA, because the dynamics of the market will be bullish. So we will be profiting till the moment that price will actually jump above the 65 EMA, which is the proper setup of our trade for this with this system. When the three EMAs will have already had their bullish crossover and then rearranged, like here, in proper bullish order, and when the signal line, like here, will be ready to touch the positive histogram with the increasing bullish momentum and will be ready to start running upwards inside it. At the moment that the signal line touches the histogram, it is ready to start running upwards. Practically we enter according to this system, like here for instance. But we are here, we are far below the ideal entry point, and we are taking this risk, and we can place our stop safely 30 pips below this level. And if we want to put it even lower, we could put it at this level of this previous lower point, but we shouldn't go that far. It's critical to watch and wait and make sure that the bearish histogram starts getting smaller, that the signal line jumped out of it. Once the signal line jumps out of the histogram, we can enter long here, no matter if the price is here, not yet above 65 EMA. So this is how we interpret the system. Let's see if we have already got the signal on the H1. We see the price, the signal line has jumped out of the bearish histogram, a huge bearish histogram on the H1 chart, so we can practically enter long here on this, from this chart. And I believe that on the M13 chart we have a more mature picture of the market. You see, the signal line has already jumped out, and the histogram, the lines that comprise the histogram are getting smaller and smaller, showing that bearish momentum is decreasing, and when it will get even smaller, then it will start building up from the other side of the zero line, and we will have bullish momentum increasing. And on the M15 chart of the pair, I believe that we are almost, yes, we are almost close to the zero line, and price is almost getting ready to jump above the 65 EMA. The three EMAs, the yellow, the magenta, the Dodger blue, the 5, 10 and 15 EMAs had their bullish crossover, and they are getting rearranged in proper bullish order. So once price jumps above 65 EMA here, and the three EMAs are in proper bullish crossover, and the signal line is ready to touch the positive histogram and start running inside it, then we can enter long from the M15 chart. And that's a great way to start. We can monitor our trade from the higher time frames once we have secured the bullish trend of the pair. Once we have secured it on the M15 chart, we can go and watch it and monitor it from the M13, the H1, or even the H4, and we can trailer our stop according to the H4 chart. So we can put it below the next higher low, and we can maximize our profits that way. Again, the upper trend line helps us evaluate possible exit point, and of course we can use the Fibonacci levels, and it's wise to exit before the higher Fibonacci level is touched, the 0 point after the correction, or it's wise to go out before the upper trend line is touched. Doesn't matter if we miss some pips. Or if you want, when we have the trend line, the signal line of MACD jumping out of the positive histogram, we can exit. This is a certain exit trigger. So choose which way you want to go. You can monitor all these signals and you can decide. I believe that the MACD signal line, which gave you an entry signal, is good to be used for your exit signal as well. But try to use it from the bigger time frame so you can maximize your profitability. And now let's go to the last system. I'm going to remove these moving averages and MACD, so we can have a look at the pair using Ichimoku Kinko Hyo. Here it is. So although let's go to the smaller time frames where the correction has ended and the reverse has begun, and see if we have okay, so we see this big bearish Kumo, and we see the price hanging below it for a while, and this is the duration of the correction, of the corrective move. But here we see the reversal, and although we get bullish signals, because they are below the Kumo, they are weak. Even the Sekou span, the green line, hasn't jumped above past price action yet, but it's in the process. But even if it goes here, it still will be below the Kumo, so we are expecting this to become bullish. Once the price goes above the Kumo, we have a bullish Kumo breakout, and see the leading Kumo has a flat top and has a curved bottom, which is a bullish reversal signal. We see that this move is reflected here to this curve, and this move here to this one. The distance between Senkou span A and Senkou span B is relatively small, so once this distance becomes 0 and we have Senkou span A and Senkou span B cross, a new small newborn bullish Kumo will be here. somewhere here, and probably sloping upwards and with a sharp leading edge. So this is what we expect to see on the M15 chart. Maybe we have it already. Yes, we have it on the M5 chart, the 5-minute chart. We have a bullish Kumo with a sharp leading edge here. We had a Kumo breakout because of the flat top. The Kumo here acted as a magnet and attracted the price, but the price escaped and started going upwards. So we saw the M15 chart that we discussed it. Let's go to the M30. Sorry. We expect this is indicative of reversal. Here is the Senko span B, and here is the second span A, a very small distance between the two, but still the price is below the Kumo. Everything looks bearish. We should wait. H1 chart. Nothing looks bullish yet here, except the Chiku span A, which is turned upwards. We see even a very sharp edge on the leading Kumo, which is definitely bearish. But because this is a bigger time frame, it is less sensitive to the price action changes than the smaller ones. And as we have seen, the new waves and the new trend directions are being born in the smaller time frames, and then they move successively to the higher ones. So even the H4 chart doesn't show, although we have this angle, this upward angle to the Kumos, each one is horizontal, and it shows that there is a range-bound move of the price for a while. But although we have this reversal here, it hasn't got noticed yet by the Kumo. So this chart says that the market sentiment at the moment is bearish. The daily chart shows that price is struggling inside the bearish Kumo, and it wants to get out, but it's in a stasis, it's in an equilibrium zone, because the Kumo represents equilibrium. Leading Kumo is bullish, but because it has a flat bottom and a curved upper border, it is a belly up Kumo, and it is definitely bearish Kumo, because if this goes down, then we'll have a reversal, and the pair will move downwards. This is what the leading edge, the leading Kumo shows here, but it may be reversed. This may be reversed if the price manages to go upwards. Then we will see that here we'll have an upward turn of the Kumo, and maybe the formation of a sharp edge. It remains to be seen. Now, how do things look like on the weekly chart? Although we had this clearly bearish looking leading Kumo with the flat bottom and the belly up and the curved, we see that it has turned horizontal here, and maybe it will turn upwards if the new week's move is bullish. And also the monthly leading Kumo is horizontal, but we have flat top and curved belly down, which is a bullish reversal picture, and the distance between Senkou span A and Senkou span B is very small, which means that price has fought to go up, and things look more bullish than bearish here, although we have consolidation and definitely triangular shape of price action. Let me insert the lines here to make this look clearer. So we have this consolidation and range bound move, you can call it as you want, which this is getting narrower, the range between which the price is moving, but biases are rather bullish than bearish. So plan your entry from the small time frames, catch the reversal early so you can maximize your profits, and exit early. Don't go for big huge profits, go for secure profits and exit early. Try to use the same criteria for your entry and the exact same criteria reversed for your exit. Happy pips!